All right. So once again, welcome to this session from wherever you are joining from. Today we want to just have an open discussion about the nature of the market. The market can be, you can do an analysis of the market from one perspective, but then it ends up in a different perspective. And sometimes when that happens, then your core objective changes to protecting your capital. So once in a while, you will see that the market will not go the way you have analyzed, and then probably now your goal will change to protecting your capital so that you do not go to a lot of losses, basically what is called damage limitation. And believe me, this thing happens to a lot of people, even the most seasoned traders, because that is just the nature of the market. Even in real life, they say economists will tell you that after recession comes expansion. So you might have a bad day today, and trust me, tomorrow is another day for you to bounce. So do not revenge trade. Do not say that I have to uh, try and recover all my trades now, but just try to limit the damage, because sometimes when you do that and you lose your emotion, you might actually dig deeper into the hole, instead of having a strategy to come out. So you need to develop a strategy to come out. They also say that after night comes day. And you see, nobody made it, it's just the rule. So even in Forex, if you have one bad day, tomorrow could be your day of redemption. And for those who live in Europe and other countries, they say after winter comes spring. So nothing lasts forever. So basically, the market is also like that. It's full of its opportunities mixed with a lot of difficulties. So I'm just going to share with you a few tips that can keep you grounded and ensure that you minimize the things that might eat or drain your capital. So these are just some thoughts that I put across. They're not exhaustive, but I think sharing them with you then will give you an idea that to be a successful trader, then the most important thing is you need to develop a plan, and then you need to practice it over time, and then now you need to develop a discipline of sticking to the plan. Because sometimes I think people have said that the market looks so nice, and then you keep trading, and then you overtrade. Before you know it, the currency turned, and you missed the turn, and that's why you start going into losses. So the first point I want to share with you today is you need to educate yourself about the forex risks and trading. So just know that if you're not careful, the market can be very unforgiving. And if you're not careful, that's how you can wipe out your account. Secondly, there's a reason why people put a stop loss, so that in case the trade go against you and maybe you're not able to act in time, then that marks the place where you do not want to lose any further beyond that. Oftentimes, you've heard coach say, we put a stop loss of, let's say, 35 pips. But that's just an indication that in case of last resort, that I lose all uh, these trades, then this is how much I need to work backward to protect my capital. This is how far I need to work. But even before you get to the stop loss, you do not need to wait until you get to minus 35 pips. Most of the time, if you study the market keenly, you'll start seeing the telltale signs that will start indicating to you that now the market is turning. Now the market is turning. And probably I need to start changing my strategy. So most of the time for me, what I do is I start killing the trades that are in the wrong direction, I don't kill them all at once. Most of the time, the market will always retrace. So the market goes something like this. Let me just draw with a pen. The market normally will go something like this. So assume now it has turned, it's going up, and you are doing sales. So for you to kill your trades, then you wait. Because you had entered sales, every time the market is retracing, you kill off some trades, you kill off some trades. At the same time, as you kill off and free up your margins, you enter buy orders. So that way you start balancing. You start balancing the bad trades, and that way you'll ensure that by the end of the day you have balanced your account and you have ensured that you're protecting your capital. So the other tip I wanted to share with you is they say do not trade, do not risk more than you can afford to lose. So if you're going to put 10 trades at a time, then stick to 10 trades at a time for now, because in case things go wrong, then you know that I can afford to lose those 10 trades, and maybe I can easily recover from those. Then we have heard about leverage, and for now I think coach has limited us to using 1 to 100, and the same goes to your lot size. The bigger the lot size, the bigger the risk, and of course also they say the bigger the reward. And then the other thing is you need to have a realistic profit expectation. There's a very good reason why coach keeps saying stick to 1% or 2%, because the more you aim higher, the higher the risk. The more you aim higher, the higher the risk. Because of the nature of our capital is small. And probably now, one day when you have a big account, then your expectation will also rise. But for now, limit your profit expectation to the size of your capital. And then you need to ensure, like the platform that you're using, the CTrader, allows you to define take profit, so that once, let's say for me, in case when I normally do scalping, I just define a take profit of 2 pips. So as soon as I get 2 pips, I am out, because I don't want to stay in that trade longer. More often than not, you'll find that if the price cycle is 10 or 12 pips, it is very highly unlikely that it will always go up to all the 12 pips. So for me, I only aim for a fraction of it, which is 2 pips of the 12 pips, which increases my rate of success. So what I do is I make up in numbers what I have reduced in my appetite for pips. So instead of going for one trade of 20 pips, I take 10 trades of 2 pips. And more often than not, all of them will take profit at the same time. Then the other thing is you need to ensure that you have your trading plan. And part of your trading plan will dictate to you when to exit the market if it is too bad and you are not able to dig yourself out of the hole. So you can define, we have had examples that coach has given us, that for him, when he loses up to I think 5% of his capital, then it's really a bad day for him. He gets out of the market. You can define a percentage for yourself. Everybody is different. Depending on, of course, your account size, you can say, if I lose up to this much and I've really tried to control my trades and it's not going my way, maybe today is not my day, I have another day to fight, then you need to start now your exit plan of exiting the trades early. So you need to define that so that you always know that once I hit this percentage of loss, then I'm out of the market. I think most platforms now allow a smart stop loss, that if I reach a certain percentage, get me out of the market, just kick me out. Then the other thing is in your plan, in your trading plan, you need to decide how much profit you want to take daily. In my case, I usually say 1% is okay. So as soon as I reach 1%, I start slowing down, meaning I don't take too many trades. And then my aim usually is to make sure that I start killing the other trades that are still running because I've already hit my target. So even if the market looks really nice, as soon as I hit my target, I start getting a plan to exit the market and close all my trades because I don't like my trades running to the next day. And then last but not least, always, just the way they used to tell us when we were preparing for exams, you prepare for the worst and then you do your best. And of course, because the market can always turn against you, know that anything is possible. And more often than not, then you need to start having a way to kill the bad trades and reverse and go according to the way the market is going. They say you basically just turn around. If you realize you're going in the wrong direction, somebody said, just simply turn around. Turn around and start facing the other direction. Thank you very much. Today was a short session, so maybe you can have a few questions, and then I can allow you to go back test and test and try your strategy. So the floor is open. Maybe let's hear from Vincent. I don't see any questions coming, but let's hear from Vincent how he normally protects his capital because I think he's developing some strategy that he's using to ensure that he doesn't lose his capital.
Hello.
Yes, please go ahead.
Okay. Sure. Thanks very much for the chance. I think most of my trades have been on scalping, and my scalping I use 5 pips as the base for my scalping. So what I do is, if I want to trade on the 1 minute, I normally first start by looking at the 1 hour, what the trend looks like, where the market is going, whether it's on a sell direction or on a buy direction. That is, of course, after I've drawn my horizontal lines for the trading zones. And then I go, after I draw the trend lines at 1 hour, then I go to 15 minutes. And I think as Coach and Ken said, you find that even at 15 minutes, the market still obeys those bands within the trend lines. Then I draw further trends at 15 minutes to show me clearly the direction that the market is taking and what is the height of the price circle within 15 minutes. And then I go down further to 1 minute, and I look at the direction of the market within the 1 minute, and I compare to see that it tallies with the 15 minutes and the 1 hour. And then what I find is that when I measure the height of the price cycle within the 1 minute, I often find maybe it's 15 pips from the bottom, say, to the top. And then just I take my trades let me say, on the one hand, in the direction of movement, just after it has turned, for example, if it has just turned to start going up, I get in and I take like 10 trades quickly, 5 pips times 10. And every time I do that, within about 3 minutes, 2 minutes, I see it has triggered and I've taken the profit. Then I let it run again. When it reaches near the top of the trend line, I take my sales just before it turns. And I enter again. Sometimes I even enter 15. 1, 2, very quickly. 15. 1, 2, 3, 4, 5, 15. I know I've got 75 pips. Within a few minutes, it takes profit. And I keep going like that until it reaches a point whereby you can see it is actually undecided whether it wants to break through the trend line or it's near the support and it's hovering near the support. I get out of that and I wait again until I have a clear direction, a clear direction for the next round of trading. So I found that if I do that and I scalp, I do the scalping like that for 1.5 hours, 2 hours, I'm able to reach my target, and I get out. Then I try to do other things. There's something I mentioned previously, I think in the last session, which I did, and I think Coach said, "Oh, that of course was taking a chance." So I'm still trying to manage that situation. I back tested and I moved the stop loss. Let me say, in comparison, I moved the stop loss to infinity. But after doing an assessment of the direction the market could take, where the market was going against me, and what I found that it may take 3-4 hours, or it may take a day. But in my experience, I've probably just been lucky. This morning, it went and I took profit on a trade which is running from yesterday. But I'm trying to manage to get out of that situation so that I don't have any trades running over there. I agree with what you're saying, Ken. You can't sleep every time you're thinking about the market and whether it's going to go against you or not, because something is running and you can't see it, you can't monitor it. That's what I could say for now.
Yes, thank you, Vincent. You're right. Even me, like the day I had a really bad day yesterday. I had analyzed the market, and of course, I didn't notice that it was just about to turn. But when I was called into that meeting, I just dreaded because, I just kept wondering, now is it a loss? Has it taken profit? You can't think. You're in this meeting, but you can't even think. You can't have peace. And that's why for me, I can't imagine doing my trades at night because I don't think I will even be able to sleep. I don't think I'll be able to sleep. Let's hear from another comeback king, Jackson. What is your strategy?
Hello, you can hear me?
Yes, please go ahead.
All right, thank you. Yeah, good evening, traders. Now, I've joined the meeting a bit later. I had a problem with my technology here. I'm not privy to what you guys were discussed, but from what I gather from what Vincent was speaking, was just giving a briefing as to how he's managing his trades. Now, on my part, actually last Friday I had a bad day. I had a really bad day. Everything that I tried was just not working. For starters, I made a very bad assumption. And I remember that in one of the classes, it has always been insisted that trade what you see, not what we are imagining, that the market is going to move to this direction. I came in with a bias that actually Friday, because the week was bullish, that Friday was going to be a bearish day, and I rushed into the market. I took all my positions in on the selling side, but unfortunately, actually the market went the other way, and I had exhausted everything that all my my purchases. So I was left there wondering what to do, and it turned out to be a bad day. So the lesson that I learned on that day, which actually I wish moving forward I will perfect on that, is that you just it needs to be very clear to you the direction that it is going by seeing what is happening on the screen, on the chart. Once you do your analysis, don't assume, I heard stories yesterday, oh, this and that is happening. Yes, it may be true, but that may not be reflected on the chart. Just look at the chart, analyze it. When you are taking buys, be sure that actually the market is bullish. If you are going to take sales, then be sure that the market has shown by indication that it is actually going to move downwards. So that is one mistake that I made and I regretted. The other thing that I learned on the other lesson I learned on that day is actually how to execute my sales or purchases, because I don't know whether that day I was so sure that today I'm going to eat hard, because I knew, I was so sure. I don't know what made me believe so much that actually we are going to have a sales day. But I used all my margins, and I was stuck. So one thing that I realized is that initially go slow. Don't really move in with with a bang into the market. Come in slow, and where you are expecting that probably the trade will move in a certain direction, I realized that it is safer actually to do buy stops instead of doing a market orders. Do buy stops, so that then really if it goes the way that you are doing, then you will not have committed any margin before actually it happens. So use of stop orders, I think it is something that is a tool that we should adopt extensively. I found it very helpful. Many times I place the orders and where they come to trigger when actually the market is moving. But if you go to make a market order, immediately it triggers, then whichever way it goes, now your margin is tied, and eventually you find yourself with no more to trade when there are very clear opportunities for you to trade. So actually, that's how today I tried to work on those two, and I think it worked out well. And I hope in the coming week I will be able to replicate that, so that there is consistency in my targets.
Thank you, Jackson. Traders, as you can hear from the different speakers, losing is part of this game. And the thing is, you just need to minimize the losses, so that at least you have a net profit. Once in a while, just like Jackson says, most of us, including actually the seasoned people, have some certain pre-bias that today the market looks this way. But sometimes you are wrong even in your analysis. Sometimes actually you even do analysis, and maybe you didn't take into consideration all the different things that you're seeing. Because probably it was on a downtrend, but it's about to hit the support, and maybe you didn't take the hint, the telltale signs. One of the things I've read somewhere else is sometimes when a trend is approaching a support or resistance, you'll start seeing the candles getting smaller and smaller. So if the candles were bigger, then suddenly you start seeing that they're getting smaller and smaller. They close, yes, is in the direction you're thinking, but then they get smaller and smaller and smaller. So that could be a way, even if you're not paying a lot of attention on the support or the resistance zones, that you start slowing down. If if you're trading like me, that I usually take 20, 30 trades at a go, then you don't do that. You start slowing down. Maybe you take 2 or 3 or 5. As you watch, basically you start watching, slowing down, because the market will just suddenly turn when it starts showing you those telltale signs. And then, just like Jackson said, now you've committed your margins and then you're stuck. The other thing that I've learned with time is don't commit all your capital, because the more you put in terms of orders, the more you also commit in terms of margin. So your free margin reduces depending on the number of trades you have running. So you be strategic that you don't commit all. You leave some for, I can call it recovery. Or if you watch games like football, for counter attack. In case the trade goes this way, then you have something to counter what is going against you, so that you don't commit everything at a go. So you take your trades in batches. You don't take, basically, like the other saying goes, you don't put all your eggs in one basket. All right. Is there anyone else who has something to share?
Excuse me, Ken.
Hello, is that Brian?
Yes.
All right, go ahead, Brian.
Okay. Please, I wanted you to repeat about how to analyze using the time frames. For example, all the time frames. There's a certain time that you analyzed it, but I did not get it. Please, could you repeat it for me?
All right, Brian. There's a video that we recorded some time back. Coach had recorded. It's called the alignment strategy. If you go to the YouTube channel, you'll see all the different time frames. But normally, what happens is you start from a higher. You start from a higher most of the time, a higher going down. So, for instance, like in my case, how I usually do is I look at the 4 hour. The 4 hour basically to give me the structure of the market. What is the market trying to do? Is it trying to go to the last low that it had done, the previous time? And then once I do that, then now I confirm the trend using the 1 hour. And then depending on where I want to trade, if I'm trading in the 1 minute, then I use the 5 minute, as a guide. But there's a lot more. It's called alignment strategy. If you look at that video, you see the different alignment depending on the place you want to trade. And I think there's some rule of thumb that coach said. So if you basically multiply your time frames by between 4 to 6. So if you're trading in the 1 minute, then you multiply by 5. It becomes 5 minutes as your guide. Then you multiply by 6. It becomes 1 hour to be your trend. So if you use that rule of thumb, then you can always divide the different alignment strategies depending on where you want to take your trades. So whether you're taking your trades in the 1 minute, the 5 minute, or the 15 minute, then using that rule of thumb that you multiply the higher time frame by between 4 to 6, and then of course you round off to the nearest, because if you multiply and then the thing comes to 24, of course you will not check a 24-minute chart. You round up to the nearest, which will be 30 minutes. But there's actually a whole video that has been recorded on the alignment strategy. So if you look at the YouTube channel, just go through again the alignment strategy as was recorded by coach some time back. I hope that will help you, Brian.
Okay, thank you, Ken.
Alex, today you're quiet. Have you been trading?
Good evening, traders.
Ken, I think you're right. Your question is negative. I think I've not been trading. Sometimes back I said that I was just going through some rough patch and I decided to slow down in everything. So I'm hoping that I'll be able to take on trading soon. However, I'm following up on everything that is happening very keenly.
All right, Alex, that's okay. Come back stronger.
Yeah.
Believe me, if you are not in the right frame of mind, then you better stay off the market. Like I think yesterday was one of my worst days. First I was feeling sick, you know, and then with all these meetings, so I just made a series of bad decisions. It's almost like one bad decision after the other. So you
Yeah.
need to be in the right frame of mind. So come back stronger, Alex. This is like you have said, it's a marathon. It's not a sprint. And it's a
Yeah.
journey that you keep learning and learning and learn as much as possible. You might not be trading, but I'm sure you're learning. You're watching us and you're reviewing everything we're doing.
I am, certainly.
All right. I can see that I've received a warning. We have 5 minutes to go. So I think we take maybe one or two questions and then we call it a night. So is there anyone with something to share?
Sorry, Vincent here.
All right.
Just a quick question. When one is taking the trades using those market buttons, the ones at the top, the middle. I tend to use those ones when I'm scalping, and I see the open positions. Sometimes it shows the percentage of open positions and the long positions and the short positions, sort of indicating what percentage of open positions are on the sell and what percentage on the buy. I wonder if you could use that as an indication of what the direction of the market, in addition to what you see on the chart.
Oh yes, you're right, Vincent. So normally what happens is the market has done already some analytics for you, and basically what it's showing you is just sentiment analysis. That majority of traders, let's say 2/3, about 60% are net short. So basically, most of them expect that the market will go down. So they are anticipating and they're placing sales orders. And then it tells you the remaining third think, the market is still going up. So they are on long position. So sometimes it could be right, sometimes not. Because if you remember the other videos that coach has shared previously, the big banks tend to do the opposite. And you see, the big banks control the biggest chunk of the market. So you might be in a net short position. You're expecting that the market will fall, and you go into those majority, the small retail traders, and you put yourselves, and then suddenly, and I think it has happened to most of us, you just see the market suddenly turning in the opposite direction. It's because the big players don't trade based on what you see, those sentiment analysis. And that's why what coach is trying to share for us here, price action. Basically, you do not trade based on what you hear on the news or what most people are doing. You basically you trade what you see. You trade what you see. So sometimes you look at the charts when you click on those buttons, and you see that the people who are on sales, the net short, are actually the majority. But if you look at the long-term trend, it's on a buy. So which do you go with? So for me, the trend supersedes what I usually say. Oh, majority of people, they could just be expecting this based on their sentimental analysis, but that doesn't mean that the market will go that way. So you are safer to trade what you see than what you are seeing there as a sentimental analysis.
Okay.
Yes. But sometimes it actually aligns. You know what most people are saying aligns also with the trend. So sometimes it just adds to your assumption and the analysis that you've done yourself. All right, but that was a very good question. I'm sure some people have sometimes tried to follow what people are doing, but it might backfire on you if you're trading against the trend. So thank you very much. I think this thing will end anytime from now. I wish you